Have you noticed that the gold prices have been falling quietly lately? What's causing this dip? And most importantly, is this a warning sign for bigger moves ahead? In today's video, we're going to talk about what's exactly happening with gold prices, why it's falling steadily during the day, and what does that key $33.70 to $33.60 level really mean. We'll also explore how traders and investors are reacting to the situation and what you should look out for if you follow the gold market. So without further ado, let's get right into today's video. The gold prices extended their intraday slide again today, staying under pressure and moving lower bit by bit as the day goes on. This downward trend isn't something dramatic, but it's consistent, which makes it really important. Prices are now testing a crucial level between $33.70 and $33.65, which used to be a resistance level but now has turned into support. Think of it like a ceiling that got broken. It's just the floor now. If gold bounces off this level, it might rise again, but if it breaks below, things could get more bearish. This move has caught attention across the financial world. Is this just a healthy pullback, or are we seeing something deeper? Gold is priced in dollars, so when the US dollar strengthens, it takes fewer dollars to buy the same amount of gold. That means the gold price goes down. Lately, the dollar has been gaining strength due to hopes that the US Federal Reserve might keep interest rates high for longer. Higher interest rates make non-yielding assets like gold less attractive. But why? It's because gold does not pay you any interest or dividends. When interest rates rise, people move their money to bonds or savings, which offer returns, unlike gold. Many short-term traders bought gold when it broke past $3,370. Now that it's pulled back to the same level, they're locking in profits. That selling adds pressure and pushes the prices lower during the day. Gold is often used as a safe haven, but when markets are calm, geopolitical tensions ease, or inflation seems under control, investors become less nervous, and some shift away from gold. Now let's focus on this important price zone. The area between $33.70 and $33.65 is more than just numbers on a screen. It's a technical level that traders watch very carefully, and here's why. In the past, gold struggled to go above the $33.70 mark, which made it resistance. But now, gold broke above this level, which has turned it into support. In trading, this term is referred to as a hurdle turn support. If prices return to that level, it's like testing out a trampoline. If the trampoline holds, the prices can bounce, but if it breaks, the gold might fall hard, possibly between $33.45 or even $33.20 in the near term. Right now, gold is sitting right on that trampoline, and we're all waiting to see what happens next. Long-term gold investors are likely staying calm because they tend to focus on macroeconomic trends like inflation, global debt, central banks buying, and geopolitical risks, for example. On the other hand, short-term traders, especially the day traders, are playing this zone with more precision. Some of them are betting on a bounce from the $33.65 area, while the others are short selling, expecting a deeper loss. The trading volume and momentum between this price zone tells us that the market is unsure. It's a tug-of-war between bulls and bears, and the winner will decide the next direction. If gold manages to stay above $3,365, it might signal that buyers are stepping in. That could trigger a bounce towards $3,385 or even $3,400 in the short term. This would be a positive sign, especially if it's backed by lower dollar strength or fresh market uncertainty. If gold falls below $3,365 and stays there, more selling pressure could follow. It might head down towards $3,345 or even test the next support level at $3,320. This would be a bearish signal, especially if the dollar continues to rise. Both paths are possible, but what matters is how gold behaves around this current support zone. For now, we're in a wait and watch mode. For long-term holders of gold, no need to panic. These short-term pullbacks can happen very often, and to be honest, these can also be opportunities for you to buy more at lower prices. However, for short-term traders, it's time for you to watch your charts closely. Use stop losses, be cautious, and wait for a clear signal before making any big moves. Remember that the gold market is known for its quick reversals, so don't chase any trend blindly. Gold prices are falling slowly but steadily during the day. The current support zone between $33.70 and $33.65 is extremely important. The strength of the US dollar, rising interest rate expectations, and calmer global markets are all contributing to this move. If this support breaks, more downside is possible, but if it holds, a bounce might be coming. Stay alert. Gold is sitting at a decision point, and whichever way it moves from here could shape the rest of the week's trend.